for having us today. Thank you for taking the time to listen to the NORAM presentation. As Alina mentioned, my name is Greg McCunn. I'm the CEO. At NORAM, we're 100% focused on developing our Zeus lithium project, which is located in central Nevada. It's a sedimentary clay deposit. Our main ticker listing is NRM on the Toronto Stock Exchange Venture. I will make some forward-looking statements during this presentation. And I'll just start with a quick capital structure and overview of NORAM. Just 2 points that I really want to make on this slide. One, insiders and management of the company do own a significant portion of NORAM at about 12%. And two, we're relatively well funded right now. As you'll see when we go through the presentation, we have been busy this year doing in engineering and de-risking of the Zeus project, spending money. We started the year with just under $12 million in cash and treasury, and we finished what's our fiscal quarter two, the end of July, so July 31st, with just under $9 million in cash. So we are in a good position to continue finishing our de-risking program this year and continue advancing the project well into next year. And thank you, Alina, for your excellent coverage of NORAM at Red Cloud. So the Zeus lithium project, as I mentioned, located in central Nevada. We are about halfway between the cities of Reno and Las Vegas, near Tonopah. I'm sure many of you are familiar with the Clayton Valley. The aerial photo that you see here on the right-hand side of this slide outlines our concessions in red. The green ponds that you see immediately to the west of the Zeus concessions are Albemarle's Silver Peak mine. It's the only brine operations operating in the United States. It's been running for many years. The brines are located in the playa. We're in the sedimentary clays that are located at slightly higher elevation, a few hundred meters above that playa floor. I started with the company as the CEO back in January, so we've been on the file now for about a year. At that time, the company was mostly through the exploration process at Zeus. There had been 6 phases of exploration drilling completed, just about 5,000 meters of drilling, and we had outlined what's one of the largest measured indicated resources for lithium in North America. We published that update to the resource estimate back in January. You can see it here. In terms of M&I, there's there's over 1 billion tons of measured and indicated resources here, grading about 941 ppm lithium. So if you wanted to look at that on a contained lithium carbonate equivalent or LCE basis, that's just about 5.2 million tons of LCE contained in the measured and indicated category, with another 1.1 million in the inferred. So that's it. This is a tremendous project. If you looked at any kind of reasonable processing rates, you'd be talking in between 3 and 6 million tons per year. So do the math on 1 billion tons. This becomes well over a 100-year mine life. It's almost a bit esoteric. So one of my main tasks when I joined the company back in January was to really focus in on finding the best actual project here, the best 20, 30, 40 years of mining life that can generate an actual return on invested capital at Zeus. So where we focused when we look at this in plan view, what you're seeing on the left-hand side here in terms of optimizing the resource around the high grades, you're seeing a color-coded plan view map of the lithium grades in the measured and indicated resource. And I just wanted to highlight this to show the dark purple colors are the highest grades on the property. The cooler yellows and greens are the lowest grade. There is a high-grade core that cuts right across the central part of our concessions here. And what we wanted to look at, we engaged with SRK, is could we make the most of that high-grade core by selectively mining it and maybe leaving some of the lower-grade material for another time, or the more modest-grade material for later in the mine life. And what we found, just based on the resource estimate that we had in hand in January, we did this work in Q2, is that we did have a good 20 years of mine life here at a 3.5 million ton per year processing plant. Processing grades, they were about 50% higher than the overall resource grade, so almost 1,500 ppm lithium. And as you'd expect, this makes a tremendous difference to the economics of the project. So this was a very good start to our optimization exercise. What we also learned in this exercise is that, although traditionally you would have done a lot of geological work early in the development of your drill plans, etc., with sedimentary clays which are outcropping at surface, relatively simple geologically, there hadn't been a lot of work done on the geology. So we, through that process of trying to optimize around that high grade, tried to just understand better how this deposit was formed, because there wasn't really a working theory on that. And what we found is we went right back to original boots on the ground, geological mapping exercise where we digitized all the regional geological maps, brought in the 1 meter LiDAR surveys of our property that we had available, and put geologists on the ground doing a 1 to 5,000 scale mapping of some of the geological features. And you're looking at a geological section here through the Clayton Valley with Zeus highlighted on those red arrows. And I think the theory that we're working with now, very similar to what you see at Thacker Pass. Thacker Pass located in a caldera, obviously volcanic flows in that case. Here in the Clayton Valley, we have the source of lithium, which is the pink color sitting underneath the sort of more taupe color or brown color of clays. We've identified the source of hot spring related fluid flows through the mineralization found on surface in this mapping exercise. We've been able to trace the fault all the way across the concession, and lo and behold, we'll be able to see how that high grade relates to that fault. And it's, what we're looking at is obviously a small amount of this deposit sitting on surface and outcropping in our very shallow drilling, forming the billion tons of measured and indicated resource. But the theory here is that there is multiple layers of lithium grades that have been deposited over geological time here. Again, very similar to what you would see over at Thacker Pass. So looking at an actual section now, again, this is a more closer section of our high-grade core. These blue lines that you see there are 3 drill holes with lithium grades being the blue bars. And when we see these drill holes, we move from the surface through modest-grade lithium resources through the high-grade core of the deposit, which is the darker red colors, and then through more modest grades again, and then our drilling kind of stopped, with the exception of a few holes where we saw, again, some higher grades picking up right at the bottom of these holes. And the deepest hole that we've drilled on this property is only 137 meters deep. And the working theory here is not only, do we better understand how these formed, but we better understand that there's a potential for more high-grade material sitting below our existing resource. So we've committed, we're right now, even though we have done quite a bit of drilling and we have a huge resource here, trying to improve the quality of that resource, we've committed to drill 10 holes in November and December. We are going to drill them deeper and test this theory where we see a second high-grade layer. And if we can add some high-grade material to this smaller version of the mine plan, our 20 to 40-year mine life, it will have a tremendous impact, obviously, on the project economics. So I think this has been a good outcome of our de-risking work in 2023. We've got a full understanding of the geology. We understand the high-grade core, and we've optimized our mine planning around the existing high-grade core. And we're looking, obviously, to add more to that here before the end of the year. In parallel to that, as I'm sure most of you are familiar with sedimentary clay deposits, these aren't mining projects per se. They're really chemical processing projects. And Zeus, we really didn't at the start of the year have much work in terms of proving up the flow sheet. We'd done some basic laboratory tests to show that the leaching with sulfuric acid had been successful, but we hadn't really tied together a flow sheet. And so over the last 6 months, we've been running laboratory scale test work at Cometco Research. It's located just outside of Vancouver, BC. Cometco had done all the previous laboratory scale work on Ioneer's Rhyolite Ridge project. They're also expected to run a pilot plant for Rhyolite Ridge next year in 2024. They've got a lot of in-house lithium expertise. We also engaged some consultants that I'd worked with in the past. I'm a hydrometallurgist by background training. And we've now put together a flow sheet that we fully tested at the laboratory scale. We've proven all the key steps of leaching, iron and aluminum removal with limestone and lime, as well as other impurity removals and purification, producing a battery-grade lithium carbonate product on site from the lithium ores. We're at the final stages of this right now. We do expect to actually announce that we have produced some lithium carbonate from solutions that were generated from our batch leaching. So you can watch for that news coming out in the coming weeks. Overall recovery here is 83% from ore in the ground to finished product. And I think that is one of the tremendous benefits when we talk about ESG, looking at these various ways of producing lithium from brines, hard rock, or clays. Clay does have the advantage that we are producing finished product here. So when we ship our product, it's not going on a boat around the world to be refined into a finished product. It's being put in a bag and being shipped 150 miles to the Tesla Gigafactory. And just the final piece of the puzzle in terms of our de-risking, water, obviously a critical and necessary resource for treating sedimentary clays. We do have an application in now for a water resource that will supply water for the first phase of our project at Zeus. It's about 10 kilometers from the location of our proposed process plant, which you can see here on this map is the green star, the location of Zeus. The boundaries here are the water basins in the Esmeralda County where the project is located in Nevada. As some of you may be familiar, obviously Albemarle, having operated Silver Peak for many, many years, have sole access to the water rights in the Clayton Valley for good reason. The water is not necessarily water, it's their lithium resource and brine. And so we've moved to the adjacent basin, which is called Alkali Springs, again about 10 kilometers away. Our plan is to build a small pipeline that will bring water along the road access and power line access to the project. We're busy finalizing that application now. It has been launched and there is the necessary water we need available in that valley. So we'd look to be locking that in here before the end of this year. So just to summarize the program in 2023, I think we have ticked a lot of boxes that we set out to do. You know, we've optimized this rather large resource around the higher grade components, making a better project out of this, a more robust project, certainly financially. We've proven up the flow sheet now using what we believe is known technology, certainly putting it together in a unique way, very similar to what Thacker Pass is doing, and we've got a lot higher level of confidence in our ability to produce on-spec material from Zeus clays than we had at the start of the year. We've identified the water source for the project, which was a critical de-risking step. And now the last remaining step here is to pull these three key de-risking events into our pre-feasibility study. We are using Alsenco to complete that pre-feasibility study. We've completed phase 1 of it, which was a scoping study that helped us identify some of the work that we had to do here. And we're expecting that once we complete our drilling and an updated mineral resource, we're going to use that for the basis of finishing phase 2 of the PFS, likely in Q2 of next year. I'm just going to quickly touch on ESG because I do think it is an important differentiator for clays. We do have a much lower carbon footprint than you would see in hard rock mining, certainly in terms of scope 1 and scope 2 emissions. Auto manufacturers are looking to lower their carbon footprint in general. I believe eventually clays will be, particularly in the United States, a very important source of that domestic supply of finished product. We don't produce any effluent here. There's no water waste. Everything is recycled. And we are dry stacking our tailings or our aluminum, in this case, aluminum and iron residues after filtration. So minimal environmental footprint, very low strip ratio, so hardly any waste becomes stockpiled in this process. And it is, I believe, one of the cleanest ways to produce lithium for use in electric vehicles. So just to finish, why invest in NORAM? We are looking at here, I think, a project that will be a mine someday. I think we've got a tremendous asset in a great location to build a mine. We talked jurisdiction in some of the earlier presentations. Nevada is one of the best places in the world to operate. I personally have operated a gold heap leach project in the state, and I think this is a very good place to build a mine in terms of flora and fauna. No evidence of that at this stage, and a rather large mining operation at Silver Peak immediately adjacent to us, already in production. In particular, I think there's a significant upside re-rating here. We've been relatively quiet this year. We haven't been out marketing the company. We've been focused on taking some of the risk out of the project. I think we've now ticked all the boxes that we want to tick in 2023, and the project has been tremendously de-risked. When you stack us up on the right-hand graph here against some of our Nevada sedimentary lithium peers, we certainly don't expect the same sort of EV per ton of resource that you might see at Lithium Americas, which is under construction. But certainly some of our development stage peers, there's a real potential here as we get out and let the investment community know in the United States, in particular, what we have in NORAM and how we're moving it through the development. So I think I'll just finish there, Alina, and leave some time.